It's another business week. Good morning and welcome to Business Morning. I'm Chimeze Obi Iwago. Thank you for joining us. Well, the weekend saw a further breakdown of law and order. Some residents and angry youths looted and vandalized government and private property in various parts of the state, including including vandalizing government warehouses and looting essential commodities meant for distribution as palliatives. Let's watch this.
This stampede is not caused by an incident that people are running away from. Far from it. It is a free-for-all, and hundreds have come from far and near to this warehouse in Osun State, southwest Nigeria, to help themselves. The foodstuff being carted away was stored by CACOVID, a private sector initiative supporting the fight to mitigate the effects of the coronavirus. But to these people, at a time when they are feeling the crunch of the lockdown, first from COVID-19, then the EndSARS protests, Christmas has come early, bearing gifts. Still in the southwest, some looters in Ekiti State invaded the federal government silos and the Agric Development Program warehouse in Ado-Ekiti, the state capital, looting bagged items and other materials. In their large numbers, the people besieged locations, apparently to cart away food items, especially CACOVID palliatives, is being witnessed in some other states across the country. Apparent surprise and delight also hit residents in Calabar, the Cross River State capital, and no one wants to miss out on the opportunity. Same excitement is experienced in Kwara State North Central, where another CACOVID warehouse stored in a cargo terminal at the state airport has seen hundreds flooding in and out with their loot. Meanwhile, the warehouse storing emergency COVID-19 palliatives suffered the same fate in Bukuru, Jos South local government area of Plateau State. The storage houses various items ranging from grains, pasta, and agricultural equipment. The expectation of people is that the food materials donated by the CACOVID drive would have been distributed, but this discovery leaves many wondering why all this foodstuff was not directed to those in need of it. And perhaps more interestingly, who are those responsible to explain this?
Well, things may seem under control now, but addressing the fundamental problems in order to avoid a repeat remains paramount. And of course, what should be the way forward? I'm being joined by the Director for Africa Development and Integration at the Center for International Policy Studies at Fordham University, Professor Abiodun Akinkumi. Professor Akinkumi is also a former Commissioner of Finance in Lagos State. Good morning, Professor. Thank you very much for joining us on the program. All right. Good morning. Yeah, Professor, watching those videos over the weekend where youths, villagers vandalize and cut away food items and valuable properties and items meant for palliative, what came to your mind? We seem to have lost Professor's video there. Okay, what is currently going on in Nigeria, of course, has attracted the attention of the international community. And here is what the IMF said at its just concluded annual meeting with the World Bank.
Suffice it to say that, economic conditions in Nigeria, of course, for the last 4 years or so have been very difficult. In the wake of the decline in oil prices in 2015-16, since then the growth has been quite anemic. There's been a lot of pressure on standards of living, so there has been this dislocation. As always, when you have these kind of economic difficulties, social protests are not uncommon. I think this is exactly why we've been, on the record in Nigeria about how really critical it is to get all of the policy-induced barriers out of the way to facilitate stronger economic growth, for the government to do more to raise revenues, to be, from non-oil resources, to be able to invest in health, education, which would allow people to be more successful at getting jobs, but also improve the economy's potential. So I think that development agenda that Nigeria has, has to be tackled with gusto and vigor, so that the millions of jobs that the country needs can be created. And I think that agenda remains very pressing. I mean, these protests happened, of course, after we had closed. After the period where the data we looked at in making the growth projections for this economic outlook, and much will depend really on how these protests evolve. Lagos, of course, is a very important economic hub and contributes quite a bit of economic activity to overall Nigeria activity. So if these persist and are showing significant effects on economic data, we will internalize them in due course. It's too soon for us to know the implications and internalize that. Are we concerned? I mean, of course, we're always concerned when we see protests, particularly ones that are difficult, like the ones in Nigeria at the moment, but also anywhere in the world, right? So, we hope that there will be a satisfactory resolution there. And as for the support we provided Nigeria earlier this year, I mean, again, this support, of course, is to help to try and cushion the awful effects that this pandemic and the economic crisis that has unfolded has had on Nigeria. It's led to a massive decline in tax revenues, important need for the government to spend resources on health, education, and other important areas at a difficult time like this, and that's what the resources were intended for. And I think the government has committed to both provide us with an explanation of what the resources have been used for, and audits of how that has been used in due course, and we look forward to that in the coming months.
All right, while we wait to get our guests ready to talk to us there, let's look at what transpired yesterday when the Southwest governors visited Lagos State to check out the damage done to the state.
One after the other, governors of the Southwest states arrive at the Lagos House Marina to commiserate with their colleague, Governor Babajide Sanwo-Olu, who is most troubled about the level of destruction of the state by rampaging youth who took advantage of the EndSARS protests. The governors were not alone, as some ministers from the Southwest region are also here for the same reason. After a brief discussion and a glimpse of some damaged property, they proceed to the street to see things for themselves. The first port of call is the Igboshire High Court.
Okay, I didn't even know that Olumide is here with us. I thought you were also a prophet. I saw you a week ago in Abuja. Why didn't you foretell this to me?
Then the Nigerian Port Authority building, as well as the State DNA and Forensic Center. And finally, at the Lekki Toll Plaza, where Mr. Babatunde Fashola believes he has found evidence that will be useful in investigating the Lekki shooting. Afterwards, they head back to Marina, appealing for peace and assuring the public of bringing the perpetrators to book.
Would we be right to say Lagos was turned to a war zone, because the damage could not have been worse than this if we were at war. The vile manipulation by elements keenly anxious to annihilate Southwest and destroy our common heritage must be condemned, and we condemn it. We charge relevant security agencies to investigate all cases of violence with a view of identifying the culprits and bringing them to book.
We are sure that all will be well. For all to be well, we appeal that we should refrain from volatile, provocative, inciting messages and language, so that we can then stand away and begin what I believe will be an investigation which the federal government is also supporting and which the state has started, that would really help us unravel how we got here.
The Speaker of the House of Representatives also came calling, and he describes the destructions as a setback for the country's commercial capital.
The governor was telling me just now that it was going to cost about ₦1 trillion to rebuild Lagos. That makes my heart heavy. In Nigeria, I never thought, where we are today, having come this far, that we'll be talking reconstruction again in any state. But that is what we are where we are. What needs to be done will be done. But I want to encourage our young men and women out there. You fought a good fight. And I'm sure deep down, you're not happy with what you have seen. The judicial panel has been set up. And I hope those who say, this is what happened, will have the courage to go before the judicial panel and say, this is what happened, and give credible evidence. And if that was indeed what happened, then the law must take its course. If that was indeed what happened, the law must take its course. But if that was not what happened, the law must also take its course. Either way, the law must take its course.
With assurances from authorities, Nigerians will be waiting to see how things unfold in the next few weeks, with hope that justice is served.
While Lagos State and indeed Nigeria are counting their losses, some economic analysts have continued to talk about the economic implications of all of these protests and the fallout of it. And one is coming from economic analyst at Codros Capital. Let's take a listen.
People have lost their jobs. I saw a lot of malls that have been destroyed. If you recall several months ago when we had the xenophobic attack as well, there were a lot of malls that were destroyed, they were looting, but this seems to be grander than what we saw in the prior months. In the prior months, we didn't see destruction, we didn't see places being razed. Now we've seen a lot of buildings, a lot of malls, a lot of institutions being razed, and that's to quantify it to several billions, hundreds of billions have been lost in terms of the naira equivalent. In terms of impact on GDP, we expect to see a negative GDP. Our outlook has been that we're going to see a GDP of about 4% negative. With what has happened, we expect the impact to be more severe, and we are forecasting about 6% in terms of impact on GDP. Of course, that's quite obvious. Business activities have been grounded. A lot of companies, like I said, have been affected as well. We're on lockdown, people can't go about their activities to earn their living as well. And the FX issue is still there as well that Nigeria is still battling with. So on a GDP perspective, we expect that to come down. In terms of the sectors that we think that is going to be badly hit, we think transportation sector is going to be affected. At the moment, people can't go about, goods and services cannot be transported. So we expect that to have a major impact in terms of transport GDP. We also expect trade to be affected. If you recall, because of the decline in consumer wallets, in terms of what people could get in terms of consumption, household consumption have been affected. And now we expect higher inflation, higher food prices. That's further going to affect wholesale and retail trade. And of course, in conjunction with the existing supply chain disruption that we've seen in the past couple of months. And that sector that I think is going to be badly affected is the manufacturing sector. They've been plagued with lack of FX for several months. And this is also going to affect them in terms of business. At the moment, the business confidence level in Nigeria is negative 17%. So all this does not augur well in terms of the investment climate. And like I said, the impact is going to be quite severe. To just mention, Nigeria, of course, is expected to enter a recession, which is 2 quarters of negative GDP. But apart from that, I think the major thing is that there's an economic phenomenon that is called stagflation. And really, that's what's going to happen to Nigeria. Stagflation talks about high unemployment, it talks about recession, and it talks about high inflation rates. Nigeria at the moment have inflation rate about 13.7%. That is massive. That is the 13th consecutive high inflation that we've seen. And this is the highest we've seen since February 2018. We expect that to go higher as the lockdown and the curfew is extended. Like I said, we're entering recession. And of course, we are going to have high unemployment. Unemployment rate is currently at 27%. And the reason stagflation is really such a difficult phenomenon is because a lot of policy watchers, a lot of economic people that formulate policies, they find it difficult because usually if you want to tackle recession, you have an expansionary policy. You try to bring down interest rates so that things in the economy can boom. If you want to tackle inflation, for instance, you try to heighten rates. So there's a conflicting scenario, and that means they need to choose between either tackling inflation or tackling recession. So that's where we find ourselves in terms of impact on GDP. In the past couple of months, there's been the FX challenge. A lot of the FPIs that had position in the equity market have not been able to exit because they've been sort of, they've not been able to get the FX demand as they ought to. And coupled with this as well, it's just going to heighten a lot of fears. Investors don't want to have any fear factor. They want to invest in stable economy that's when they can have their returns. So this is going to impact the FDIs coming into the country or the economy. Also FPIs coming as well. We saw a lot of police stations being burned down. We saw the MPA building being burned down. We saw a lot of the malls. And some of those malls are not local, they are foreign owned. So for a lot of investors, they don't want to come to economies that seem unstable because really it's people's funds and return is usually key when you invest. So this is going to really heighten or just make the investment climate not too attractive. So in the immediate, I will expect the state government and the federal government to try to douse that low confidence, to try to restore confidence, one, in the citizen and in the investing climate. I think another thing that came out of this is the social unrest. I think the income inequality gap in Nigeria can't be ignored in this period. And a lot of looting that went on in a lot of the shops in Lekki, in Surulere, people just going about taking TVs, and that speaks to the income inequality gap. Which is quite high in Nigeria. So I think that also needs to be attended to, try to reduce that inequality gap, reduce the divide between the rich and the poor. And there was a quote by somebody that said that one day that the poor will not have anything left to eat than the rich. And I think if that divide can be reduced through education, through social infrastructure, and through healthcare, that can be addressed visibly, and that will be able to help the investors' confidence. And the much needed FPI and FDIs that we need will come back into the economy.
The Securities and Exchange Commission, in collaboration with the Financial Literacy Technical Committee and other stakeholders, have set aside this week to commemorate this year's edition of the World Investor Week. Interestingly, this is coming at a time when the country is going through some kind of civil unrest. So we'll talk about that after the break. Do stay with us. Welcome back. Right, we have Professor Abiodun Akinkunmi to react to those events at the weekend. Professor Akinkunmi is a former Commissioner of Finance in Lagos State. Thank you very much for joining us on the program, Professor. Well, sometimes technology can actually disappoint, but it's okay. Now, watching those videos over the weekend where youths, villagers vandalize and cut away food items and valuable property, and of course, items meant for palliatives, what came to your mind?
My heart goes to families of those who lost their lives in their quest for a fair and better Nigeria. I also feel sadness that Nigeria will never benefit from the greatness that was instilled in some of the lives lost. So it's incumbent in some of us still living that we follow the fourth line of our national anthem, which says, "The labor of our heroes past shall never be in vain." But with that said, it's disheartening to witness the needless and vicious destruction of properties and other assets. Businesses that provided employment and fed many families, assets that served their communities, as is required of a civil society. As a Nigerian who has struggled to build a business in a somewhat difficult business and political environment, my heart bleeds as I imagine that some of those businesses owners must be currently going through. Even those who are lucky enough to have insurance will be significantly set back, particularly at the time and place that money is expensive. Once it's our natural instinct to play the blame card, we must focus our energy on what is ahead of us. How do we work to ensure that all this issue does not occur again? But I must say to you, the government and the government agency and the security agency must enhance. It's an opportunity for them to enhance their toolkit with big data and online presence. The protesters show that there's a strong presence of concerned youth able to express themselves online, and they express themselves offline. This presents an opportunity to engage a significant population and take advantage of the scale, the variety, and velocity of data produced online. Sentiments and situations evolve very quickly, and a modern government needs to be receptive and responsive to development by monitoring those trends online. This approach should
Go ahead.
This approach should complement traditional means of engaging with the population and traditional security assessment. This episode has shown there's need to be more responsive to popular sentiment, and this is an important tool in modern governance and security monitoring. With that said, we cannot talk about the economy. We cannot talk about the economy, not address politics. And that is why we have the field of political economy. The politicians we vote represent us. They determine in large part the economy we get. Our elected politicians direct the course of our nation and our appointed officials.
All right, Professor, let me come in here. Some would argue that the fundamental problem is the issue of trust and accountability on the part of government. You were in the government as a Commissioner for Finance in Lagos State. Do you agree with that? And if that be the case, how can that be dealt with?
Look, governments have had these issues. I'm going to share a story with you. The gentleman's name is Franklin Roosevelt. This is one of the Great Depression in the 1930s. There was 25% of unemployment youth, and everybody has lost hope. And Franklin Roosevelt came on board in 1933. And what did Franklin Roosevelt do? He came up with something we call the New Deal. Everything that we're experiencing today, the Lincoln Tunnel in the US, the LaGuardia. Those are the outputs of that. Government needs to make some strong commitments and move forward. The New Deal is a good example. I say we have an opportunity to create the Lekki New Deal and take advantage of these young boys and girls and put them to work. Look, significant portion of our budget is used to finance our debt. Government should work with the private sector and solve this problem. Government has absolutely no business in building highways, Lagos-Ibadan Expressway, for example. That fund can be used to service all that public infrastructure, such as education and schools, sort of education and good health. Government has absolutely no business with that. We can have our own Lekki New Deal and move forward and forge ahead and get the private sector to help us to solve that problem. So currently we have some social investment programs, I call them government transfers, such as the trader money, the conditional cash transfers, the N-Power, and recently, the youth investment funds. So we need to ask ourselves, are we going to deal with the transfers or public services? Public services empowers our people. That is what we need to get into. We need to change the paradigm. We need to shift completely. And government needs to put these young boys and girls back to work. And we can do it. And that, in fact, you know what? That will bring private investment back to the country. But government needs to be sincere about that.
All right. Thank you very much. I guess we'll have to leave that conversation there. Thank you, Professor Akinkunmi, for sharing your thoughts there. Professor Akinkunmi is the Director for Africa Development and Integration at the Center for International Policy Studies at Fordham University in New York. He is also a former Commissioner of Finance in Lagos State. Thank you for your time. Well, I talked about the Securities and Exchange Commission in collaboration with the Financial Literacy Technical Committee and other stakeholders having set aside this week to commemorate this year's edition of the World Investor Week. The World Investor Week is being promoted by the International Organization of Securities Commissions with the aim of promoting investor education and protection. Joining me now to speak more on this is the Executive Commissioner, Operations, Securities and Exchange Commission, Dayo Obison. Thank you very much, Mr. Dayo, for joining us on the program.
And thank you for having me.
Right, let's understand first, what is the World Investor Week all about? What is the objective?
Okay, thank you again for the question. Just as you had rightly pointed out, it's a week set aside by the International Organization of Securities Commissions just to bring forth or to project better its three main objectives for protecting investors, making that markets are free, fair and transparent, and just reducing to a large extent to eliminate systemic risk. So it takes out a week once every year. And with all its member organizations, over 220 of us, Securities and Exchange Commission is the one representing Nigeria on the IOSCO at the moment. And we choose out the theme. The theme for this year is to propagate the basic tenets of investment, especially towards investors realizing that investments have inherent risk. You need to know and understudy and understand those risks before you can make a well-informed decision. Two, you need to be aware of the costs that may be associated with such investment. And in doing that, you know, one way to propagate other than just coming to a TV program like this, which is a one-off, is to constantly educate people, which the Securities Exchange Commission has been doing even before, will continue to do after the World Investor Week. For example, on the 30th, on Friday, there's going to be a webinar. We've been having different series of webinars or enlightenment programs targeted at different levels of investors, just to bring to the fore a sense of investment, what to watch, look out for, major key considerations that you should be mindful of so you can make a well-informed decision.
It comes at a time when the world is battling with the COVID-19 pandemic. And of course, back here in Nigeria, aside from COVID-19, we have seen the social unrest that the country is facing. So what would it now mean for the investor and the regulator?
Okay, so now that comes, I mentioned earlier about risk. Investment, capital will always seek destination. Even before NSAS, there was COVID-19. Before that, there was issue or scare around the falling oil prices. And before that, there will always be something. But the truth of the matter, if you look at different indexes, you see investments still keep going up. Now, what we are focused on doing is to make sure that the investing public is quite aware of investment options. The metrics they need to look out for in making a proper, well-informed investment decision. Now, two things will come out of this. There will be need for capital to rebuild. There will be need for capital for investment. There will be need for capital in every sphere. Just before I came on, I listened to Professor Kikumi talk and one of the analysts from the capital market talk about likely outcome of all the destruction that has happened. Now, if these funds are going to be raised through the capital markets, which we sincerely hope they will be, which is more efficient they are, or they will be raised through the capital market, when investors are putting their monies in, do they understand what they're putting their monies into? Increasingly, I read a report over the weekend, for example, about the increase of online scams and Ponzi schemes in the US. I mean, these are peculiar times. Things like this will always come up. But the first way to even empower and to even close out those kind of, should I say, ill-informed decision or wrong decision is to invest the public, which is one of the things we are doing now. We will continue to do at the Securities and Exchange Commission.
So what are the key messages for this week, for the World Investor Week? What are the key message there?
So one is to project further the basic tenets, the basic things to know about investing, and to let the investing public know that risks are inherent in every investment opportunity. You need to be well aware of those. That is why on all prospectuses or any documents that is issued, it's always written there in red that you should always seek advice from a fund manager or an accountant or a CMO or as a capital market operator to guide you right. So the major message for this week is to project the basic tenets of investment, encourage mobilization of savings and investments, encourage people to save and invest. Those are the key things we're projecting this week.
Now, you talked about the Ponzi scheme, and we are all aware of the activities of the promoters of this scheme in the country and how much havoc they have wreaked on innocent and indeed ignorant Nigerians. The Commission had earlier announced plans to commence the regulation of digital assets transaction. Where is SEC in these regulation plans?
Okay, so I'll start from the second offshoot, which is the digital assets. So you will remember about a month ago, the Securities and Exchange Commission, we came up with a firm stand that will be looking more into the digital asset space. Now, before now, what had happened was there still are a lot of, should I say, digital asset managers or digital operators, and and the main, should I use the word excuse, or the main reason they were given for not coming under regulatory purview is that there was no grand position or a firm position from the regulators. Now that has been made known. That's what is going to follow that very quickly in succession is the incubatory guidelines, which is quite ready, but we just need to do a couple more of education for the users and the investors, and even for our counterparts and other agencies as well. So before we roll that out. Now, it will interest you to know that the level of activities of people involved in digital asset investment has increased. Nigeria, I think one of the reports I said, Nigeria is about the third largest in terms of volume of transaction, and that is spanning over the last 2 years. Now, it will be difficult or impossible, or it won't be very wise for us to ignore that space, because it's not just about the digital asset space, it's about the alternative for gone. I mean, these are funds that should have been invested in collective investment schemes, which the Securities and Exchange Commission has been propagating for the last, God knows, 10 years. I'll give you an example of a statistic. In the collective investment space, we have less than 400,000 investors and maybe about 1.4 trillion in assets. Now, one of the digital exchanges, which I saw the statistic, I think about 2 weeks ago, says within January, and as at the time I read the report, they had seen up to 820,000 transactions, new transactions flowing through their system. So we have made a stand on this at the SEC. Right now, we'll be pushing out the incubatory guidelines very soon, and we'll expect, and just as we have been recording quite a number of interested parties, filing their application or signifying intention that they want to bring their platforms under regulatory purview. So that is on that one side. On the other hand, we talked about Ponzi schemes. Ponzi schemes have been existing for a long time, and it is not unusual, especially at this kind of time when people are looking for unusual returns or desperately seeking for ways to push out their funds in order to get some ROI, some returns on investment. Now, what is key is you close out. So there are different ways you could do that. One, you just increase the level of enforcement, keep looking, but then again, you keep playing a chasing game, because there are so many of them that are not even at the surface. They're running on the ground, running as thrift societies at a very low scale, running this pyramid, taking money, hard-earned money from low-income earning people as low as 1,500 naira, raking in billions, just as you said. So the SEC has been at the forefront of that. There was a popular case which we pushed forward for prosecution. I think we got judgment, October 13th, and that is ongoing. We're investigating many other cases on the Ponzi scheme. But what is most important is to avoid, so prevention is better than cure. Enforcement is a cure. So one of the main ways to prevent is to educate people. Let them know the alternatives that are available. Let them know that Ponzi schemes are risky. And let them know if there is a way. For example, you could look on the SEC website, www.sec.gov.ng, get a list of capital or market operators that are listed, that are known, that have fair and transparent enough way and seek to be under regulatory guidelines. I mean, if what you're doing is worth knowing, worth investing in, and it's quite transparent, you should not shy away from being under regulatory purview. And we have the list on our website. And thirdly is, why do people patronize them? Unusual returns, probably instantaneous reaction. So one of the things we are doing, or will continue to do at the SEC, is to increase or quicken our time to market. So when the time for application to approval for every transaction is made shorter, so that won't be an excuse. Make sure that every return declared or promised by fund managers or operators are something they can defend, something realistic, and just keep projecting the image and pushing out on social media, on every form, to let the investing public know, or keep them informed, as it were. That starts from schools. Maybe
Mr. Dayo,
in line, as we progress, I'll have the opportunity of telling about other things we're doing at the moment.
Well, I guess we really don't have much time. But just before I let you go, yes, the week is about educating the investing public. What are the redress system available in the Nigerian capital market for investors who might have reasons to seek such?
There are multiple levels. We've got a robust complaint management framework. And again, all these details are available on our website, just as I highlighted earlier. We've got, if you've been disadvantaged in any way, we've got Administrative Proceedings Committee, which entertains complaints from investors, even from CMOs to themselves, that's capital market operators to themselves. And we listen and judge all these cases. Further than that, you contact the commission. There are a list of numbers. We've got a desk that has been set up to address complaints from the public, even from operators, and multiple level of different kind of avenues where we address complaints, or we just take care of other things that we see that are infractions that are affecting the market or the operations thereof.
All right, thank you very much for your time, Mr. Dayo Obison, the
Thank you.
Executive Commissioner, Operations, Securities and Exchange Commission. Thank you for your time. Okay, we take a quick break, and when we come back, of course, we cross over to London, and again, back here, we look at the activities at the local markets. To stay with us. All right, let's begin this segment in London with Juliana Olayinka. Good morning, Juliana. Well, it's a brand new week. How have Londoners woken up to a new week? What are the expectations?
Yes, it's a brand new week, but it's the same old story for the start of a week in London, I'm afraid, and that's Brexit. Brexit is once again back in the spotlight. Last week, at the beginning of the week, this time last Monday, when I was speaking to the team, it had seemed that hopes of a Brexit deal had almost disappeared. But alas, that's not the case. Downing Street reaffirmed that negotiations were still ongoing, and then the EU's chief negotiator, Michel Barnier, arrived to the capital on Thursday. And now talks were to come to a conclusion yesterday, but we've just received information from Downing Street that the talks have been extended for a further 3 days, and there appears to be at least some ground that they're gaining on the state level of play, competition rights, and of course, most importantly, talking about access to Britain's fishing waters. They appear to be the three bones of contention that are still there, but of course, time is running increasingly thin. So it would be interesting to see what happens on Wednesday, especially because that's the day Prime Minister Boris Johnson will be at his dispatch box during Prime Minister's questions. So perhaps there could be some sort of deal announced then, but I won't be putting my money on it. But the good thing is talks are still ongoing.
And in corporate news, Royal Mail aims to hire about 33,000 additional workers for the Christmas period. I guess good news for the job market.
Yeah, this is absolutely great news, especially as we know the furlough scheme is coming to an end this week, and we are expecting to see, as one British commentator called it this morning, a bloodbath of job losses. But yes, Royal Mail, the parcel delivery service, they have announced that they'll be hiring 33,000 temporary workers this period, as they're expecting a massive surge in online shopping, particularly as so many people won't be able to see their loved ones. There are so many different restrictions up and down the length and breadth of Britain. In some places, you cannot actually go and shop in stores if you're on a tier 3 restriction. So they are expecting the trajectory of online shopping to continue, especially in the busiest time of the year, which is Q4, which happens to fall into Christmas. Royal Mail have really struggled over the past couple of years, particularly this year. Most people are not sending letters anymore. I can't remember the last time I sent a letter. I mostly send emails. So they're trying to shift into this rather competitive online delivery service, and they're doing quite well. So they hope that that will continue during this last season of the year, which is why they're employing these thousands upon thousands of temporary workers, which, as you say, is great for Britain's labour market.
So what are the market's opening numbers like this morning, and what is driving sentiment at the moment?
Not great this morning. FTSE opened in the red. FTSE 250 also opened in the red. FTSE 100, the leading share of indexes, opened about 0.8% lower. The FTSE 250, the domestic market, opened about 0.6% lower. I believe at the moment the British pound sterling is trading 0.11% lower against the US dollar. Closer to our shores, lots of sentiment centred around COVID-19. Spain has just called a state of emergency as they're seeing a huge surge in positive COVID cases. There are some parts of that country that at the moment hospitals are looking like they did at the peak of the virus. We're having the same issue here in Britain. Steadily, we're seeing these COVID-19 cases rising, and it appears as if Emmanuel Macron in France may indeed call a state of emergency there. That's really getting investors worried. And across the pond in America, lots of attention, of course, is focusing on this once-in-a-lifetime US ballot, which is to hold next week, and the fact that time is running out for this stimulus package that had been promised and then taken away and then promised again. I believe Nancy Pelosi, the Speaker, is trying to sort something out, but it's looking less than likely that a stimulus package will come. So yes, sentiment at the moment pretty low, but who knows, you know, an hour is a long time in the business community. So let's see what the numbers look like at intraday, Chimmy.
Absolutely, and we'll wait for your update and remain optimistic for a better week. Thank you, Juliana. And back here we have Eddie to give us the highlight of what happened at the market last week. Eddie, well, although we had the protests and the social unrest, but the bulls remain there.
You're right, Jimmy, the bulls remain there. And that was largely due to the fact that the lower yields in the fixed income space, investors would rather put their money in places where they will have yields. So although the civil unrest in the country last week kind of dampened investor sentiment as we saw lower yields, but because of, as we saw lower volumes, I beg your pardon, but because of lower yields in the fixed income space, investors had their eyes for stocks like Dangote Cement, International Breweries, Nigerian Breweries, and Stanbic Bank. And that rose the market by 0.13% week on week to 28,697.06 points, while the equity cap was at 14.999 trillion naira. Like I said, we saw lower volumes yesterday. Last week, we saw 1.50 billion units worth 19.66 billion naira traded in 20,552 deals. All the sectors, apart from the consumer goods sector, declined last week, and that was due to the gains on international breweries and Nigerian breweries. But just before we go ahead with the market review, let's talk to Rotimi Fakaijo, a stockbroker. Good morning, Mr. Fakaijo. Thank you for joining us on the program. Now, as the weak macro environment, remains a significant headwind to corporate and the market, what should we expect from investor sentiment this week?
Well, I expect that things will definitely get better this week, because even as we had it last week, whereby the curfew, the event at the Gate and all of those things, we saw that the market was able to gain traction and the trajectory was up. If that has been the case, even while pending release of financial results of some quoted companies, some have released their own, and I think there's no disappointment at all. I think the market is actually well prepared for the more results that are going to be released, and I think that this definitely will propel the market further and boost investors' confidence. I think investors really believe that the equity market has what it takes to give them the kind of required return for the year 2020. And that the figures have not really been disappointing at all. So I expect that for this week, things definitely may take a better shape as the atmosphere is very calm now and peace is returning back to Lagos.
All right, Mr. Fakaijo, thank you for your input on the program. Rotimi Fakaijo is a stockbroker. Now let's just go on with the market review. The fixed income market was mostly bullish last week. The bond market in particular was bullish as we saw yields decline by about 23 basis points week on week, and that was due to robust system liquidity. On Friday, we had 26 deals worth 9.62 billion naira. The Nigerian Treasury bills market was also bullish last week, although on Friday we didn't have any deals on that counter, while the OMO market was bullish. But on Friday, we had 3 deals worth 1.79 billion naira on that counter. This week, there's going to be an the CBN will be conducting an OMO maturity where we'll be seeing about 36.09 billion maturities being auctioned, and then the FGN bond coupon payments will be coming in this week. So we expect robust liquidity in the markets, which will most likely have an impact on yields due to excess liquidity in the system. Now, we also expect a contraction of yields due to lower demand for the treasury bills and OMO bills, because the yields on those counters or those segments of the market have dropped to the 1.0 level or even 0.50 level. So we'll be seeing a lot of the market, the fixed income market is going to be bullish this week, and expected to see most of investors' attention at the equities markets. But we'll leave it there for the market review, Chimi, and we'll hope for a profitable trading day.
Absolutely. Well, if I'm an investor, of course, I will go to where I'll get my money back.
Exactly.
All right. And on that note, we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimizi Obi Iwago.